And to do so, we just checked with the businesses that we support and just have identified what are the drivers that they use most in their models to get a good overview of how they should position yourself. Well, most of you know is that if you look at the bigger large language models, as what we call them, then you can have like generative AI, right? And generative AI in terms of reasoning, like if I give you a data set, what is your analysis considering this data set? If I want to achieve outcome X, that is something that an AI can generate across, right? So if you give a specific agent, AI agent that uses an LLM as a reasoning engine, then you can just give it some variables to understand your business context. And from that perspective, we just analyze like what is like the biggest or the main drivers that organizations now want to use to get that answer out of a specific agent. Now, what we see is like if we look at economical factors, we see the GDP. So in terms of do we have an increase in GDP or do we have a neutral GDP or a decrease? Can even be more specific that you take a GDP per capita. There are different, let's say, metrics how you can go about it. Then we can look at the inflation rate. So how more expensive are products actually becoming? So to understand more or less, the availability of capital across of humans and of course the production sites, and if the basic resources, the resources that go in materials, if they go up or down, and of course, also the unrest in the world. So is transportation consuming more because we have like fights in the Red Sea and that they have to go across Africa to deliver goods towards Europe. So these are things that we can take into consideration if we look at the inflation rates. And then the final one is the interest. And the interest is just the monetary policy. So it's funny to see, but you hear that central banks, for instance, are lowering their capital interest rates. But you see that because the interest rates that we eventually pay is a combination of the what central banks set and what the private market is setting. And although the central banks are lowering it, then we still see an increase in those interest rates. So meaning that we see more uncertainty in that sense how businesses want to go about it, and that we just need more higher rates across the 10-year or 20-year or 30-year loans that we give. But the interest rates tell us a little bit about how loose or how tight monetary policy is. And depending on those circumstances, it also tells us a little bit how big the pie can become. Because if these monetary policies are really loose, then we get a big pie. If those monetary policies are really tight, then you can also assume that we have a little less big pie to share with each other. Then we have the next step, is the volatility of currency exchange rates. It was always already important, of course, for businesses that did business across different continents and borders. Lately, we have seen, for instance, a really strong dollar. And then if you have a dollar that appreciates against other currencies, then that means something that if you do some trades in different parts of the world, that you have to be keen on how that influences your business results. So that is another factor that we see with the bigger organizations that are taking into account. The other one are the trade agreements and the tariffs. I like the example of the Chinese electric cars, because there are a lot of in the news, and I think it resonates to most of the people who join this session. So what we see is that within Europe, but also in the US, we see that governments are asking like a higher tariff to get those cars into the continent, right? So meaning that Chinese producers just have to pay a premium to get those cars onto the market, so that we have a more equal playing field for the producers within Europe that maybe have to pay more higher prices for the production and for the resources of the car, so that there's like a more equal playing field. And how more of those tariffs and trade agreements are made, it tells you something about like how dynamic the market at that current state is, and if we have like a constant nice development business market, or that it is actually becoming quite volatile and that we see like some disturbance in certain domains. And the final one is that what we see is that there are a lot of business reports and outlooks that are produced by economical experts. You can use these reports and outlooks. Of course, you have a lot of opinions in the market, so you should be keen on who you follow and where you are willing to trust their research capabilities. But you can use, of course, these inputs to get an outlook towards the future and to digest that in your analysis capabilities using an LLM.